Welcome back to the channel. On today's episode, we're going to do a deep dive into loan documents and just a general tutorial on how I present loan documents to a buyer. Feel free to steal whatever I use or put it in your own words, but at least you get an idea of how I present documents. So please utilize this as best you can. And also, I'm going to cover common mistakes as a signing service owner I see on these documents to, again, hopefully prevent you from making those same mistakes. So thank you for joining us today. If you love great notary content, please subscribe to the channel, like or share this video if you think it's going to be helpful for someone newer getting started in the business. And that's all we do on the channel, to provide value to you, our favorite notary signing agents out there. So without further hesitation, let me jump in and jump right into the documents. So we are looking at a buyer signing with today's date. I have redacted or erased most of the buyers, if not all the buyer's information, their address. So if you see random blocks, white blocks on here, it's because I've redacted. So that's why you will not be able to see some of the information. Now I'm just going to cover loan documents today, not title documents. As you can see, we're starting on page 25 of 135 at the top here. So we're going to go over the next 110 pages of loan documents and how I present them. Now, I have a separate video on how I prep documents that I also filmed today that'll be released very near to this video, so feel free to check that out as well. So I'm not going to go in depth in that, but as far as closing instructions on the loan documents, obviously most of the time these instructions are for the title company, not needed for the borrower. A couple lenders will have them where the borrowers will need to sign. Not many though, but you don't want to assume that it's just for the title company. You do want to scroll through and make sure that there's no signature spot for the actual signers themselves. And all right, yeah, so closing certification by the settlement agent, signature and date. I redacted the settlement agent's name, but it's for the title company, not for you and not for the borrower. So you can skip this or paperclip it so you know you don't have to bother with it. Closing disclosure. Now, how I present this. So I have a separate video I'm going to link right here in the video about how I present an ALTA settlement statement. So that is really thorough. I would use that when I get to the second page of the closing disclosure. As far as details, I'm not going to go through it here, but I will cover everything else in the closing disclosure right now. So closing disclosure, how I present it to the borrowers. In this case, the buyers. Normally I present the settlement statement and then the closing disclosure. And as far as the CD or closing disclosure, here's how I go. Hi, Mr. and Mrs. Borrower. In this case, it's one buyer. This is your closing disclosure. You've already seen this many times before because you've had to e-sign it multiple times before you met me today. So we're not going to go too in depth because I know you've reviewed it. We're just confirming nothing has changed. So again, this is where I point to your loan amount, $405,000. Interest rate is 6.375. Principal and interest that you owe the bank every month, $25.26.67. There's no prepayment penalty, and there's no balloon payment. And up top, in the right-hand column, it is a 30-year fixed conventional loan. And then I'll scroll to the bottom of page 1. And as you can see, in this case, the first 11 years, since they're putting less than 20% down, you have mortgage insurance, and that will fall off automatically once you get to 78% loan to value. I know that because I've read the document later we'll see about private mortgage insurance, and you'll know that too as you get more experience. But the private mortgage insurance, just really quick what it is for the lenders involved. So if you're putting less than 20% down as a borrower, the lenders consider you an at-risk or riskier borrower, so they want to de-risk and offset that risk, so they make you pay an extra $192.38 in this case every single month. That way if you default before you get to 20% loan to value, they feel like they got extra money out of you. But that will fall off automatically. After 11 years, you'll see it in a document later. And then that means your monthly payment will get to drop by almost $200 to here. But for now, today is April 18th as I'm filming this, 2024. Your first payment is going to be due June 1st, Mr. Buyer or Mr. Buyer, because April is a partial month. You're paying interest for this partial month of April we're closing in. May is your first full month, and you pay for May, June 1st. So it's the opposite of renting. You live in it first for the month, then you pay. Great. And then your taxes, insurance in your escrow account, that's right here. So that creates your monthly total of $3,066.88, again, due June 1st. Cash to close. This is the same number you just saw on the ALTA settlement statement we reviewed. Again, I usually review that first before I go over the closing disclosure. Just confirming all the numbers have matched. Nothing's changed. Perfect. Page 2, Mr. Buyer, we've already seen closing costs. We just reviewed that on the Alta settlement statement. Again, feel free to watch that video. Page 3, Mr. Buyer, at the top, you can see the loan estimate when you first started the process, what the numbers were, and then obviously the final numbers right here. And obviously the main difference is you put $10,000 down as your down payment. That's the biggest difference between the two numbers. Next, page 4, taxes, insurance for your escrow account, top right-hand corner here. Taxes, insurance for the year are right here. In this case, you have an HOA, so your HOA dues are right here. That's annually for the year. The initial escrow balance we're setting up today. And then when you start making that monthly payment in June, how much of your monthly payment, $540, goes into that escrow account to pay those property taxes and homeowners insurance when they're due. Next, page 5. Truth in lending numbers are at the top. Total number of payments, the interest, if you didn't make any extra payments and paid for 30 straight years, the amount that you are financing, your APR. And some people may ask, well, why is my APR higher than my interest rate of 6.375? It's because APR includes total cost, which includes your closing costs. So it includes if I scroll back up here real quick, it includes the $2,676.79 divided out over 30 years, so that it is slightly higher than 6.375 because it includes closing costs right here. Cool. And then total interest expressed as a percentage, which is because they're paying over $500,000 in interest and they're only borrowing this much. That's why you get that 124%. That's why paying down your mortgage early, if it makes sense for you, can make a lot of sense because you're saving a ton of money. And then contact info is at the bottom. I redacted all the broker information, title company information. And then, Mr. Buyer, your signature right here, and then today's date. The note. Now, this is one of the more important documents. Generally, you want to have this toward the top of the document set. It's kind of the IOU documents. But basically, Mr. Buyer, this is the IOU document, just confirming the loan amount's the same, $405,000. Yep. Same interest rate, 6.375. First payment June 1st, as we talked about already, for the 30-year term till 2054. The principal and interest right here. And usually they'll ask, well, why is this lower than my monthly payment? I thought my monthly payment was $3,066. It is. This is just the principal and interest. It does not include your escrow account to pay your taxes and insurance, and it does not include your mortgage insurance. It's just principal and interest that you owe to the bank for 30 years. No prepayment penalty. I have the right to make payments of principal. Most of the time, for residential loans, there is never a prepayment penalty. Loan charges, again, Mr. Buyer, if you are late, you have the first 15 days to make your monthly mortgage payment. Sorry, I'm looking for the 15. It's typically on here. Sorry, give me 1 second. Here we go. Yeah, the first 15 calendar days. So you have until June 15th to make that first monthly mortgage payment. On the 16th, the lender will hit you with a 5% late fee. So obviously you want to avoid that. So make sure you have that paid. You could also set up auto pay. Lender loves that. And that way it'll come out on the 1st of the month or the 8th of the month or whatever day you want. And then obviously you're not going to be credit late until you're at least 30 days late. And then please sign here, Mr. Buyer. Now, most notes will not require the lender won't want them dated. So this is where you'll have to let them know multiple times. Please don't date this. Please don't date this. Just your signature. And then watch them like a hawk, because they typically will date because they're kind of on autopilot where they're signing and dating. Addendum to the note. This one, again, is just signature right here. Again, no date. And this just slightly modifies the note, Mr. Buyer. Just says the note's governed by federal law. That's it. Deed of trust. So if you're in a deed of trust state, you'll see this. If you're in a mortgage state, you'll see mortgage. Either way, it's going to be between 15 to 30 pages, regardless. And how I present it to the document or to the buyer is this. Hi, Mr. Borrower. This is your deed of trust. This is in here because there's a loan against the property. This is recorded along with the deed. So it's public record that there's a loan. This makes the lender happy. Only two things I'm looking for is your name. Is that correct? It's usually right here. I redacted it. Perfect. And the loan amount matches the $405,000 for the 30 years. Perfect. All that matches. Fantastic. And we're going to skip on past the 25 paragraphs that are in all Maryland Deed of Trust because it's all exactly the same. And we're going to need you to sign right here. And most of the time, deed of trust and mortgages will have a date as well. But in this case, this particular lender doesn't want it. So I would remind them, just your signature, no date. And then the next page would be my acknowledgement. So acknowledgement, State of Maryland, County of Frederick, assuming that's where I'm actually doing the closing. This record was acknowledged before me on today's date by full borrower name, my signature, my printed name, my expiration date. Yes, this was done in person, and my stamp right here. And it's Maryland, so I'd also put in my tipping information. I'd write it in or stamp it in right there as well. If you're not in Maryland or Indiana, you can ignore that. If you're like, what is a tipping, Brad? Don't bother with it. It doesn't apply to you. And then this is a Maryland thing, affidavit of consideration and disbursement. If you get a Maryland property, you'll see this on the deed of trust. This last page is for the title company to have filled out and notarized. So you can ignore it. Just says that the funds for the transaction are true and bona fide, meaning the funds are in the house. They're good to go. Again, does not apply to you as the notary. You would leave this blank. HOA rider or planned unit development rider or PUD just says that how I present it to the buyer. Hi, Mr. Buyer. This is just an HOA rider. Goes right behind the deed of trust. Just says that, yes, you are in an HOA. The Westview HOA. Please follow their rules and pay their fees. That makes the lender happy. Please sign here. Again, usually this is sign and date. Not for this lender. They just want a signature only. Seal. And just as a side note, newer notaries will get confused when they see the word seal because they think that means they have to notarize and put their stamp. In this case, the word seal is just the Old English or the English word referencing, please place your seal as the signer, your signature, your mark, your X will be right here. That does not mean that you are stamping this. Seal for the signers means signature. Seal for us means the stamp. Next is your loan application. You're going to see a lot of redacted white blocks, so you're not going to see a lot of info, just spoiler alert. But on page 1 of the loan application under personal information, you would normally see the borrower's name. Again, I've redacted it. And then there's a spot right here. It says number of signers. In this case, it would be 1 because it's one borrower. And there's a little line right there that you'd have them initial. You would have them initial. If there were 2 borrowers, this is borrower number 1 and their personal information, their job history, their debt to income. Later on in the loan application, like 5 pages, you see the same thing for the second borrower, and that second borrower would have a spot to sign as well. To initial as well. They'd have their own initial page as well. They're not initialing each other's. Borrower 1 initials their own stuff. Borrower 2 initials their own page. And then there's an actual acknowledgement signature page. Now, in the loan app, also, besides that little initial page that gets missed, a lot of times some lenders will actually have initial spots at the bottom of every page. To look at that, when you get to the loan application, sometimes it would be somewhere in here. They would have another line, an initial line for every page. In this case, the lender doesn't have it, so we're good. So there's nothing really to do. This is about their employment. This is about their assets and liabilities to determine debt to income. Yep, acknowledgement and agreement. Yep, this is for you to sign a date here, Mr. Buyer. Yep, it just says that everything's true, best of your knowledge, nothing's changed. Signature and date right there, please. Thank you. And then there's usually a lender signature spot, loan originator, lender. That's for the lender to sign or e-sign. That is not for the borrower. You can skip past that. And more demographic information, nothing for them to sign or initial. And that's it. Next, addendum to the loan application, homestead. So, Mr. Buyer, can anyone other than you claim a homestead interest in the property that will secure repayment of the loan? And you should be checking no, because you are the only owner. If yes, you'd have to put the other parties. Please sign a date right here. Next, errors and omissions. This is if I miss a signature, you will cooperate with the borrower or with the lender and promptly sign whatever document I missed. Cool? Cool. Signature and date right here. And right here, and if you're not sure, just read it. Just says any person signing this authorization for in consideration of the lender funding the loan, if requested by the lender or the title company, to fully cooperate in the correction of any problems or defects in any of the loan documents, including without limitation any missing or defective signatures, missing or defective acknowledgement. In other words, again, just says that they can, you'll sign and date promptly whatever was missed, and then notarization is here on page 2. And then the next document, first lien letter. This is actually just for the title company. In connection with the property covered by the caption title insurance commitment, we wish to advise we have closed and completely dispersed the mortgage. Again, this is for the title company, and the title company settlement officer's name is usually right here. I redacted it, but they would sign a date, so nothing for the borrower to sign. First payment letter. So you always want to point this out, Mr. Buyer. Again, first payment letter. Just reiterating, yes, your monthly payment, $3,066.88. Just breaks down the principal and interest, the mortgage insurance, and the escrow account for taxes and insurance. We saw that earlier on the closing disclosure. And then in this case, there's no signature and date spot. Most lenders will have a signature and date spot, so somewhere around here. This is one of the few that doesn't for this document, but I still show it to them anyway. Just confirming, yep, no numbers have changed. First time home buyer affidavit. This is the Maryland thing. They get a credit on their state transfer tax if they're a first time Maryland home buyer. They have to sign this affidavit swearing that they are indeed a first time home buyer. So it says right here, Joe Blow is an individual who has never owned property in Maryland. So as I present it to the borrower, I just say, yep, this is in here. You're just swearing, Mr. Buyer, that you have never owned property in the state of Maryland, and you are going to live here as your principal residence. Sign and date here, and then I notarize here at the bottom. Limited durable power of attorney to correct documents. This is in here. So again, allowing the title company or lender, in this case, to, because it's in the loan document, so this is the lender's version. The title company will have a version of this as well in their documents. But for the lender documents, this is in here, Mr. Borrower, just to allow them to correct any things that we have screwed up. Maybe we missed a date, maybe we missed an initial. Allows them to correct that. In no way, you'll see it's bolded. It says this limited durable power of attorney is offered as a service to the borrower, in other words, to save them time if they miss something small. Neither lender nor its successors or assigns is requiring the borrower to sign this limited durable power of attorney and appoint them as an agent for the limited purposes indicated above, so the borrower can obtain the loan. This is just to correct minor documents. Again, in bold here, therefore, any clerical or typographical errors are found in the document related to my loan, which would trigger one or more of these limitations. Agent must contact me with these documents. So again, this is just for them to correct any minor issues, sign a date, and then notarize at the bottom. Signature name affidavit. So again, I redacted it, but in this case, it had them signing their first and last name here, as they've been showing up on the documents, and then also their full name here. Again, I redacted it, but John Jacob Heyer Smith, full name. So in the name affidavit, the common error I typically see is, since they're signing twice, sometimes this first one will get missed. Other times, they'll have a version of this where they will have their other names pulled from the credit history, and they may be incorrect. And for some reason, the notaries will have them draw a line through it, initial it, and write never known as. So again, do not ever correct loan or title documents unless you have express permission from the lender or the title company. You're asking to get some stuff re-signed, a negative review, blacklisted, and to lose money if you do this. If the borrower is like, hey, that's not my name, I need to cross it out. No, Mr. Borrower, we cannot do that unless we have permission to do so. Let's call your lender. Let's call the title company. If you don't get a hold of them, leave the voicemails, call the numbers, but do not let them correct anything, because it's most likely going to be rejected. If they've put up a fuss, again, these names may be incorrect because they're pulled from your credit report. If you want them corrected, go to Experian, go to Credit Karma, and submit a request to get them corrected because they're not right. But that has nothing to do with you. And then signature, and then you're notarizing here, second page. Borrower certification and authorization. This one just says, yes, I have applied, Mr. Buyer. I've applied for a loan with Citizens Bank, and you are allowing them to verify your income and employment. That's it. Sign and date here. Just authorizes them to verify that your employer, you're still employed. They're just verifying that before they give you hundreds of thousands of dollars for a loan. Affidavit of occupancy. This one just says you swear that you are going to live in the property as your principal residence, assuming that's the case. Sign a date here. Other times, if it's a vacation home or a rental property, it would say that as well. I swear this is a rental home. I swear this is a vacation home. In this case, it's a principal residence. And then notarize on page 2. Notice concerning PMI or private mortgage insurance. As we talked about, Mr. Buyer, once your loan gets to 78% loan to value, your private mortgage insurance will automatically terminate and your monthly payment will drop by that $192 and change that we saw on the closing disclosure earlier. It's possible for you to get rid of it sooner if you reach 80% loan to value. You can call the lender and ask them to check. They may have to do an appraisal if it's close, and the lender will work with you. But yeah, it's possible to get rid of it earlier, assuming you made extra payments to the principal balance, or the home is appreciated. Maybe you've done repairs or updates or both. You can get rid of that sooner. Talk with your lender, and they'll run the numbers for you. Sign and date. Choice of insurance, just reminding them that they can choose their homeowner's insurance provider. That's always up to them. Signature and date right there. Acknowledgement of receipt of copy of appraisal. Mr. Buyer just says you have received a copy of your appraisal. Sign and date here. Usually that's been emailed to them in a giant PDF, usually at least a week before closing, depending on how late the appraisal was ordered. ID affidavit. This is basically like the Patriot Act form. This lender has a different version of it. This is their version of the Patriot Act form. So you'd fill in the driver's license information, the passport information up top, and then they would sign and date it saying, yep, that is indeed my ID information. And then you're notarizing their signature down here. Now, in the normal Patriot Act form that you see more frequently, when you're signing that, and I can't show you an example here, but you would be filling out the ID and then signing and dating it, and it'll ask for, who's signing it and their title. It's usually Brad Martin, Notary Public. Next, closing attorney's fee certification. This one, in this case, is for the title company to sign and date. Oftentimes, you'll see it for the borrower to sign and date. Either way, when I present it, if the borrower is signing it, this is how I present it. Mr. Borrower, this document is just saying that there were no lender fees in excess of $100 associated with your transaction. Sign and date here. In this case, it's not already pre-checked, so they would typically check the very first one. My fee in connection with this loan is attributable to processing and closing the loan, not to unrelated services. My fee does not exceed $100. Next, Maryland lender and originator disclosures. So this is actually a form for the lenders to get signed, saying that they did indeed give the proper disclosures to the borrower in the right amount of time, and they'll get that notarized on their side of things. Some notaries will see this and try to get it signed by the borrower or notarize it. That's not for you. Homeowners insurance and requirements, or hazard insurance authorization and requirements. This one's just letting the borrower know, Mr. Borrower, that you have to have homeowners insurance while you have the loan. Signature and date is right here. Next, escrow account disclosure. This one's just giving them Mr. Borrower, a monthly breakdown of as you make that monthly payment. First one's in June. $540 goes in that account every month, and it just fills up until it's time to pay your property taxes twice a year. One in July, and the other semi-annual payment in January. And then the homeowner's insurance this time next year in April at $816 there. It just goes around in a circle over and over again. Signature and dates right there. Escrow account notice. Kind of the same thing. Instead, just gives a summary for the year. That's the property taxes. That's the mortgage insurance you're paying. That's the homeowner's insurance you're paying. Sign and date there. Borrower authorization for counseling. If I fail to make my mortgage payment as agreed, I understand the servicer of my loan may refer me to a third-party counseling. So when I present this, I just say, Mr. Borrower, Mr. Buyer, this is in here just in case you fail to make the monthly payment. The lender will try to get you help with that. Signature and date right there. Next, authorization for Social Security Administration to release Social Security number verification. Now, in this one, again, I've redacted it, but the Social Security number will be right here. So I'm just verifying that they have it correct. And they're signing right here in the middle and dating right here in the middle. Now, there's this other spot on this form in bold, so let's read it together. This consent is valid only for one-time use. This consent is valid only for 90 days from the date signed, unless indicated otherwise by the individual named above. If you wish to change this time frame, please fill in the following. So if for some reason the borrower wants to change the time frame that they have access to the Social Security number to, let's say, 30 days. They could put in 30 days right here in this block that I've redacted, or in this line right here. And then they could put their borrower initials right here. If they're cool with 90 days, they can just leave this blank. But again, they do want to sign right here in the middle and date right here in the middle. Next, 4506C, authorization for copy of their tax returns. In this case, just one borrower, their name's right up here. I redacted it. Their Social Security number right here. I redacted it. Their address right here. I redacted it. And then they would be checking this box right here. Signatory attests that he or she has read the above attestation clause, and upon so reading declares he or she has the authority to sign the form. Just says, yes, you can sign for yourself. So they have to check this box, sign their name here, and today's date right here. And their name is printed right here. I redacted it, but the name is usually printed right here. Now, if you're in front of two borrowers, oftentimes they will have the second borrower's name right here. Spouse's first name, spouse's last name, their social, and then they would be signing and dating right here. Spouse's signature, spouse's date, printed name would be right down here. Now, oftentimes you also see when there's two of them, they'll have three of these. One for one borrower, one for the other borrower, and a joint one for both of them. So again, just pay attention. General rule, whoever's name is at the top is the one signing the bottom. So let's say there's two of them. Two borrowers you're sitting in front of, but only the male spouse is right here. Only the male spouse is signing at the bottom, right here. Do not have the other spouse sign if their name is not on this document. Okay, that just further complicates things. Not needed. And the second page is just instructions for the form. Consent to the use of tax return information. Again, sign and date here. Mr. Buyer just says that they have access to your tax returns to verify your income. That way they know you're not lying. Citizens Bank, this is a privacy policy. Just says Citizens Bank tries to limit the sharing of your personal information. There's nothing for them to actually sign. You'll see at the bottom of page 1, there's actually a spot that they could, do not share my creditworthiness or personal information with your affiliates, or allow your affiliates access to this information, that they could fill this out and mail it in. They're going to get a hard copy of this because you're going to hand it to them at the closing. They'll also get a digital copy from the title company, most likely, as well. So if they're concerned about this, you can tell them when you get this form, this is how you prevent sharing. But in general, there's nothing for them to do. However, I typically will write in the word initials right here at the bottom of page 1 and have each borrower initial this. Same thing with the title company. They have a privacy policy. I just had them initial just to verify that they did indeed read it. If they don't need it, don't want it, they can trash it. But most of the time, the unwritten rule is that there's a privacy policy. Have the borrowers initial it if there's not an outright signature or initial spot. Next, acknowledgement that we may contact you by telephone, text, and email. This is just saying exactly that, Mr. Buyer, that the lender can call you or contact you or email you about your loan. That's it. Signature and date right there. Amortization schedule. This one, the way I present it. All right, Mr. Buyer, this one, you can present this many ways. You can try to be funny about it. You can say things like, this one's kind of depressing. Please sign a date on the last page. It lists your payments and all the interest you're paying. In this case, this lender doesn't have a signature and date spot at the end of the amortization payment schedule. Normally it would be right here in the last page. So technically you don't have to show it to them, but I still like to show it to them just to educate them, especially if they're a newer buyer. If they're an experienced buyer, they're going to get a copy of it. I wouldn't present it in this case because there's no signature and date. But if they're a newer person, first time buying, I would show them this. Okay, and this is how I would present it to them so they can read it so it doesn't look like Greek language to them. Mr. Borrower, payment number 1, June 1st. Principal and interest, $27.19.05. That never changes. This is how much goes to principal to knock your balance down. This is how much goes to interest to the bank to make them happy. That's for the mortgage insurance to the bank. That's your new balance after you make that first payment. And loan to value, LTV, that's how much you have. Said the other way, you have 7% equity in the home already because you put 7% down. All right, after the amortization schedule, and you can give them tips on about how to make extra payments to the principal to knock their balance down. You can tell them that, if you make one extra payment a year to principal directly, that will shave 7 years off the life of the loan. You can tell them all that good stuff to flex, to add value to them, to share your knowledge, whatever you want to do. Next, This one's just a credit card offer from the lender. So I'm just going to skip on past that. I wouldn't even present that to the buyer. W-9. This one, just double checking that their name, their social is correct. Again, I redacted it. They are signing and dating right here in the middle. Signature of U.S. person, date. And how I present it. This is the W-9. Double check your social is good. Signature, date's in the middle. They asked me why it's in here. I just let them know the lender has to have this information. So at the end of the year, they share to the IRS how much interest, mortgage interest you paid. So if you decide to claim it as a deduction on your taxes, which you can, there's a record of it, but they have to disclose that to the IRS. And then pages 2, 3, 4, and 5 are just instruction in the form. I never showed this. I only show them page 1. I don't show them pages 2 through 5. I don't even hand it to them because they'll start reading it. I'm like, there's no point to read it. Next, almost done, guys. Property condition certificate. This just says that you are holding the lender harmless due to the condition of the property. It's basically saying if stuff breaks tomorrow on the property, that's on you, not the lender. That's you to do your due diligence. But signature and date's right there. Next, rate lock agreement. Mr. Buyer just says that you did lock in. In this case, you locked it in. Your rate 6.375 on April 3rd. Nothing new there. Redisclosing fees you already know about. Origination, processing, underwriting. Signature and date is right here. And the bottom section here is for the lender, which you do not have to worry about. This one, this is how you pay your mortgage payment through their mobile app. Again, I just skip past this, nothing for them to sign. This next section is just instructions to the title company, so skipping past that. Critical documents, yep, that's for the title company. And lastly, the homeowner's insurance declaration page is in here. Again, nothing for them to sign. You'll always see it in here. Sometimes also, side note, at the end of the package, you'll see a statement of information. It'll look like basically a blank piece of paper. Maybe at the top, it'll say, I, John Smith, changed jobs 8 months ago. My new job is XYZ Mining Company, signed John Smith. You'll see it in here, and you're like, why is this in here? It's a statement of information that requires a signature, and the lender needs them to sign it and date it, even though there's no line for them to sign and date, but just know that that's what that is. That's also a commonly missed one. Cool. So I hope that has helped you tremendously as far as how to present loan documents specifically. If you have any questions on other documents I didn't talk about, feel free to leave those questions in the comments below. And I hope this has added great value to you. Now, if you are a notary signing agent that has direct business, just so you know, or when you get direct business, we do offer 10% commissions uncapped to any notaries that refer us business to help their title clients for out-of-state closings that you can't personally do, because we cover all 50 states for closings, in-person or remote online notarization, bilingual, whatever your clients may need. All you have to do is email your title client and CC me, Brad, at superlativesignings.com, and just say, Brad and his team will be more than happy to help you out on this closing in Texas, California, Hawaii, wherever it may be. And we will pay you 10% of whatever orders they send our way every month, direct deposit. We have notaries that take advantage of this every single month, and we would love to add more money to your bottom line. Now, if you have watched to the end, I appreciate the heck out of you. Thank you so much for being the 1%, the diehard notaries, and happy signing. I hope this has added value to you and make your next closing a little bit smoother. Feel free to steal whatever you need. And until next time, guys, peace.